Cool. So yes, I am beyond excited to announce a panel today about venture capital, in particular, how VC is adapting to the macro environment. And thank you so much to the panelists because there is a 15-hour difference. This is like the sort of thing that happens during Zoom calls virtually. So in this discussion, we have Gwendolyn Regina, Jill Carlson, Suna Amaz, and Nick Grossman. And so the format of this panel will be an open discussion. So I'll be here to lightly nudge a question at times as a fallback, but feel free to get a conversation going to wherever you want. So first of all, please, can you introduce yourself in 2 or 3 sentences?
Yeah, I can start. Can you guys hear me?
Yep.
Well, okay, cool. Yeah, so I'm Suna Amaz. I'm general partner at Volt Capital. We focus on the picks and shovels around cryptocurrencies and digital assets. I also run a community called Token Daily. You guys might subscribe to the newsletter. It's a bunch of these vibrant and incredibly smart engineers and operators that are looking, for their next big thing or just wanting to keep the pulse on what's going on in crypto.
Thanks, Suna. I'll hop in here. My name is Jill Carlson. I'm a principal at Slow Ventures. We are a seed stage fund based in Silicon Valley. We invest really across the gamut from consumer all the way over to things like crypto, which Suna was just talking about. Really excited to be here virtually. This is my first virtual event that I'm participating in. Shout out to the team for putting it together and excited for this conversation.
Hi everyone, I'll go next. My name is Gwen. I'm sitting in Singapore, 11 p.m. So good evening to everyone. My side hustle right now is on questions. So I'm really exploring the art and science of asking what is a good question. So it's on questions.com, little plug. And my background is across technology startup scene as well as a media. So I spent kind of several years doing several things. I have worn the hat of an entrepreneur. I started a tech blog a long time ago that was acquired. I also was really lucky in having started early in the internet days in Singapore and Southeast Asia in 2005. I was very lucky to start a fund in collaboration with the Singapore government. So for the last 15 years, I've really dabbled in both the founder side, the operator side, investment side, and hopefully today I can contribute some of that experience, and especially now as an angel investor.
Great. Hey, everybody. I'm Nick Grossman. I'm a partner at Union Square Ventures. We're a venture capital firm based in New York City. This is our office behind us that I am not in. No one's in it right now, of course. We've been investing at the applications layer mostly of the internet since 2004. The firm was sort of born in the ashes of the dot-com crisis, and have been investing for the last 15 years in what is now later stage internet ecosystem, which includes a heavy focus for me and for us on crypto assets and blockchain technology, but also all the places that the internet hasn't crept into in our lives yet, which I think are still a lot of places in terms of education and healthcare and work and so on. And this is also my first virtual large conference. And I think one bonus for me is that I think my parents are watching. So hi, Mom and Dad. Nice to see you.
Awesome. So let's kick off. Actually, that was a great transition about internet software companies, because there was a recent piece by Founders Fund, John Dodig, which I thought was very interesting, about the analysis of internet so far since the dot-com bubble, how it evolved and how it's increasingly zero-sum and less exponential growth and more stable, predictable growth. And so perhaps potentially less VC backable. And so do you have any commentary on this? Is crypto or other remote-based startups a relay of growth in that regard? So would love to have your feedback and commentary on this. Anyone can start.
I'll hop in. Oh, okay. Sorry, Gwendolyn, go ahead.
Okay. There's a conversation, right? Not really panel-like. So whether VC, so I read that article as well, but just I guess on your point, Alex, whether VC will cease to exist or something, I guess there's two to 1 versus 0. I don't think it is. I do think that the number of financing models will increase. Again, over the last several years, we've really seen much more revenue-based financing, you know, where you're kind of borrowing, getting and giving maybe a little bit of equity to your current investors, where you're borrowing from your future income. I think such models will continue to kind of grow. I think VC will always have a place, because I really think that, especially for deep tech, and I spent some time, a year and a half or so, with Entrepreneur Fest in Paris, where we focus on investing in PhDs and postdocs to help them create new companies. I think for such very technologically driven models, where you're trying to do paradigm shifts, fundamentals first, I do think you still need VC funding to really accelerate R&D and accelerate growth. But that's my quick comment there. Jordan, go ahead.
Yeah, I mean, I would agree with that I don't think that venture capital is going away. I think that perhaps those in the space are going to be playing on hard mode for the next several years, you know, just as founders are. I think that the idea that software has already eaten the world and there's nowhere left for it to go in order to generate the kinds of returns that we've seen over the last couple of decades, I don't agree with that. I think Nick was starting to speak to this himself. There are still so many areas, you know, from real estate to insurance to education, where we haven't seen, I think, the full extent to which software can disrupt. I think, interestingly, you know, in response to the article that you mentioned, Alex, a lot of it talks about how this notion of, you know, software's kind of already eaten the world, and you know, a lot of things that are going to come now, as Gwendolyn started to talk about, are going to be these more kind of low margin businesses, et cetera. I think that, you know, there's been this misconception over the last several years anyway in venture that it's possible to get venture returns in these more low margin businesses. And I think that we started to see the tables turn on that narrative over the last year or so, as, you know, a lot of these sort of SoftBank backed businesses, et cetera, have had a day of reckoning, sort of rightly or wrongly. And so interestingly, I think that narrative had kind of already shifted pre-COVID, and it's easy to now associate that with the pandemic, just because it feels like everything is being so shaken up now. But I don't think that those two are necessarily related.
I completely agree with Jill. I think that this conversation may have been more interesting if we had VCs and non-VCs on, because of course we're all going to say that VC is not dead, and that is purely because of our you know, career choice. But well, a lot of it has to do with the thinking that went into what we selected as our career, right? But you know, for the sake that I'm assuming we're all in consensus, if you Google, you know, VC is dead, or, you know, is there nothing left or new on the internet? This is a topic that comes up every few years, and it usually happens in a calamitous time, post-bubble, during coronavirus. I think John actually timed this article well, because people over-index on what's happening now, and believe that any change that occurs just due to recency bias is going to be extrapolated out into the future, and everything will be different. These things that weren't working are dead. And it's overwhelmingly negative, especially when you're in a risk-off environment. And if you actually look to what behaviors have been happening during coronavirus, you know, screen time is up. It's unlocked a lot of verticals that have since until now been resistant to being digitized, things like education, healthcare, et cetera.
Yeah. So
I don't buy the argument that, you know, these tailwinds have vanished, though many of them have transformed. And it probably would have been a different conversation if he'd isolated certain verticals. So if you look at social media, for instance, okay, there may be more zero-sum dynamics occurring there. If I'm looking at my Instagram feed and it's primarily filled with TikTok videos, then there's clearly some zero-sum dynamic at play there. But we don't saturate one internet pasture, we just move on to different ones and unlock different verticals. And that's how I've always viewed it. And I think another thing to consider is this is a largely US-centric view. I don't think that this really applies to what it looks like around the world. If you internationally look at, smartphone penetration and how, folks are increasingly coming along, online in different parts of the world as well.
Yeah, I put the link into the chat for those of you who have not read the article that we're all talking about, but I think the basic idea is that, okay, here we are in 2020, everybody has a smartphone and a Facebook account and an internet connection, and therefore sort of internet is over and everything has been figured out. And so I think I agree with everything that was said here in terms of like, it's just a question of, I think a better way to think about it is what on earth hasn't been transformed by software and the internet yet? And I think there's so much in work and in education and learning and in healthcare that hasn't even begun to be changed yet. And one way of thinking about it is, who are you competing with? Are you competing with paper, or are you competing with another software company? And I think part of the point of this article was increasingly tech companies are going to be competing with other tech companies, and that's sort of the more zero-sum thing. So I think that there's some truth to that, but I think there's still a whole lot of paper out there in the world that is causing things to be slow and cumbersome. And in the depths of every industry that exists. And I don't think that opportunity is going anywhere right now. And then I think all this coronavirus stuff has shown like, oh man, like it's actually accelerating the change into doing more things online and more things connected. And so even though we may be saturated in terms of how much time we can spend on a screen, I think we're just at the beginning of figuring out what we can do, with software and the internet in all different like parts of our lives. And then, we've also been like really long, like crypto and blockchain. And I think that is one area where there is wide open ocean, there's broad experimentation. You don't have big incumbents like Amazon and Apple, like blocking out the landscape. And there's new ways of designing, pure software systems that can be built by, two kids in a garage or an apartment in Brooklyn, and I think that's alive and well. So I think there's a lot to be done. That's how I feel.
I want to hop in and say one more thing about the points that the article makes, because it's not just about, and again, Nick popped it in the chat and I just popped it in the Q&A as well, for those following along at home. But part of what it talks about, it's not just about what verticals are going to remain interesting in this new kind of paradigm. It's also about what venture capital is good for. And yeah. I think that this, again, this is nothing new in sort of the age of coronavirus. I think that perhaps the current economic environment throws this point into very sharp relief, and we can no longer get away with the kind of hand waving again of like, oh, these low margin capital intensive businesses are, appropriate for venture capital just by virtue of the fact that they're capital intensive. We can't get away with that more kind of lazy thinking anymore. We have to be very diligent about the fact that venture capital is primarily good for running experiments, R&D that are going to be high return, that can have that exponential growth vector. It's not appropriate for just pouring gasoline on a fire that's already burning. A lot of these kind of misconceptions that have indeed returned markups perhaps over the last several years and may continue to do so. But again, when the day of reckoning comes in the public markets, it's always been a lot more difficult. And again, I think that this is nothing that's new to the time of coronavirus, but again, I think it's thrown into harsh relief right now.
Can I kind of jump in a little bit of a geographical context? Because I think Suna, you mentioned this is a very American-centric point of view. Mm-hmm. So my experience has been mostly in Asia. I spent some time in the Valley and Paris, as I mentioned earlier, but mostly in Asia. And when you look at Asia, it's I don't know how you all feel, but biasly, I feel like Asia has gotten much more kind of global awareness. And just to set some context, right? Asia is super huge. You have China and India and the whole Southeast Asia and a lot of other parts, where 2/3 of the entire world's population, right? And when you look at technology diffusion, you always need, technology and capital, right? Capital to fund that technology diffusion. And it always starts in cities and in nodes in these cities where everything's more densely connected, and then innovation kind of spreads out, right? So when you look at, say, Southeast Asia, where I'm from, and it's like 600 million population or something across several different markets, you're looking at very differing kind of landscapes. You have many cities. So Singapore, I'm from, Hong Kong, Jakarta, Manila, Bangkok, Kuala Lumpur, they're all like cities where you have to look at it as one market, right? So the kind of technology diffusion that happens there, it's a very different rate as what's happening in rural areas, right? So then kind of linking back to kind of topics we talked about, so the point of kind of VC coming in, yes, it's still happening in these cities and will continue to happen, because in this region, there's still a lot of innovation that happens, sometimes slower than, say, the US, slower than China, but sometimes also faster, because we have different kinds of environments and infrastructure, right? So again, a lot of rural areas jumping to mobile first, / in a country like Indonesia, where it's a country made out of like 7,000 islands or more, or 14,000, I'm very wrongly, 7,000 maybe. And you're talking about how telemedicine, for example, is going to be way more important, for a country like that, right? So it's about the kinds of innovation that happens differently. So I wouldn't go so far to say that it's not just, I would add on like not just verticals, but also like geographical kind of location, and also like how the speed of that technology diffusion.
That's great. I think those are completely valid to look at. I wanted to piggyback off what Jill was saying in terms of there are different things that are being funded, and there's venture capital going to high growth, great unit economic type of companies. And then there are throwing gasoline over a fire and selling a company to your buddy, or getting somebody that's already proven themselves in some capacity and kind of saving face and having them have an acquisition or some botched IPO. And these are completely different things to be funding. And I do think that during coronavirus, during deflationary periods, during any time of economic turmoil, we become more risk averse, and we start turning in to looking at the basics and going back to the fundamentals. Well, okay, let's look away from more risk-prone activities like high growth, and let's look at what immediate monetization looks like. What do they actually have coming in the bank via MRR? What does EBITDA look like, right? And I think that in addition to that, you also have folks that are looking for, if they have felt stung by venture capital or the mistakes have been made during more bullish times, they're looking for different ways to experiment that they think are more risk off, like an income sharing agreement, for instance, right? And there are different experimental models, but that doesn't necessarily render existing models obsolete, right? So I do not think that even in a world where VC is dead, it's not that venture capital ceases to exist all of a sudden. It's that other people are looking for other forms of finding investment and funding projects alongside venture capital as well. And then based on the types of margins they're looking for, will seek different funding appropriately. But I am curious, how has your guys' viewpoint changed in terms of what you're looking at when you invest? How do you think of growth versus profit now that EBITDA is out of the window? How are you guys thinking about analyzing even unit economics, which founders before were presenting and oftentimes would get wrong because frankly they were led astray by VCs who also couldn't do the math? How are you guys looking at that kind of situation and evaluating it?
Yeah, I mean, it's
Go ahead, Jill. Yeah.
It's interesting trying to reason about any of that at the seed stage, because often companies are pitching us before they have any of those things. So from that perspective, on the one hand, the good news is, the immediate pitch hasn't changed materially, and it was never an expectation that, there were many data points in terms of any of those things coming in. Certainly, it's important to be able to reason about the future, however. And that's where I would say things have materially changed is, you're always looking ahead, not only to the dream IPO vision 10 years down the line, but also what is the next round going to look like? How can we reason about what the Series A looks like, what the growth rounds following that will look like? And that's where things, again, have changed in terms of the fact that we can no longer depend on the same revenue dynamics going into a Series A round. And so for that reason, a lot of what we've been spending our time on trying to be able to think through and trying to get a grasp of is how Series A investors will be thinking about things, 18 months down the line when they're looking at a cohort of companies that have had to come of age in this environment.
One specific question that seems to be coming up a lot right now is that there's a tremendous amount of growth in anything remote, video oriented, whether that's in learning or health or, remote collaboration. Zoom, is up 30x since December or something like that. And so a lot of companies that are doing that one way or another are raising right now and looking for big multiples. And I think a major question is about retention and how much of all of this crazy shift in behavior we're seeing everywhere on Earth this month is actually going to stick and turn into like longer term new behaviors. So I think that's a funny quirk of this moment where the growth in a lot of cases is off the charts, but like totally unknown whether that is just going to vanish when things sort of go back to normal, or whether we'll reset at some new level and we'll start to see what kinds of behaviors are more durable and longer term.
So I heard someone refer to it as COVID market fit as opposed to product market fit.
Right.
Good one. That's a good one, COVID market fit. Well, Suna, I love your question. And well, technically I'm not a VC now, so I'm just an angel. So I don't have the firepower like all of you do. But what I'm kind of talking my companies and kind of other companies as well, it's kind of, really kind of focusing on what do you think, if you're pivoting now, new product, new business model, whatever, what do you think will continue to remain, essentially to Nick's point, right? Because I don't want them to do something just to capitalize and leverage off this time. And then for some reason, either 3 months, 6 months, 18 months from now, and everything dies, past COVID market, I guess, situation, and then things die. So that's what I'm kind of really looking out for right now in terms of the pivots. What basically the question is that what will not change? What will be consistent? And for consumer behavior, I don't know. I mean, that's the question I have, which is that all this video stuff, will virtual museum, how will our consumption of art change or not change? Will we now be more used to doing virtual museums tours, that can potentially like unleash a whole new like kind of side of revenue streams for a lot of like art museums and stuff like that, right? But will this continue? I don't know.
Right, those are great questions to ask.
The way that I think about it is very accelerationist. Just quickly, I think that the trends that were already happening have been accelerated, and it'll be interesting when we look at like entirely new behaviors. But that's just quickly, kind of my framework for it.
Yeah, and you're seeing that in terms of behaviors and also in terms of regulations. So, things that have been blocking the growth of telehealth or remote education, like those are going out the window because people have no choice. And so there's this, like everybody's learning new tricks right now. And I think accelerationist is exactly the right way to think about that. And we've been spending a fair bit of time trying to at least build a framework for, which of these things will be the easiest to sustain versus harder to sustain. As an example, if people start going back to work more, even though we've learned some new tricks around online education, taking care of kids during the day is still going to be a hard problem, and we won't, our kids won't all be doing school on video, full time. Whereas events like this are, really awesome and so much more accessible than a standard conference, and doesn't require anyone to get on a plane. And you can imagine, behavior changes like that, like really sticking. So I think it's an exciting moment to like just see what new behaviors people are learning, and maybe back to this first point about like the role of VC and zero sum. There is already a huge VC pile on anything that looks like remote friendly with traction right now. So I think you will end up with like a bunch of way overpriced financings on everything in this category, and that may still be okay in the end, but there'll probably be some ugly situations there in a few years too.
I saw someone wrote quite funnily that like how a lot of companies are trying to do more Slack integrations and again remote working tool apps, but it's like for that joke was about is not for a future paradigm of work from home. What you don't need Slack integrations. What you need is childcare, which I think is so true.
Yeah, I think on a lot of the remote work stuff, I think that people want just this silver bullet that can make it easier for them or more manageable for them or allow them to collaborate as though they were in person, things like this. But so often the tools are only as good as the behaviors that people have adopted or the processes that people have adopted. And Suna, I know you'll be able to speak to this, and Nick as well, having spent a lot of time in crypto systems and security, et cetera. But there's this notion in InfoSec or cybersecurity as well that exists that, you know, you can't just use 1Password, for instance. You can't just use some cybersecurity product. You need to institute processes around it that enable that product to actually work. I think the same notion very much applies to remote work, where people so often, managers so often skimp on the processes while over indexing on just onboarding a whole bunch of these sort of buzzy SaaS tools, which the tools are very important. I'm not sure I completely agree with Nick that there's going to be carnage in that space. I think that some of the valuations now, again, taking my kind of accelerationist perspective, are not unreasonable. But I do think that there is a tendency to over-index on what feels like a quick fix without investing properly in the processes around them.
No
yeah,
doubt.
and I think that we underestimate how much of this will be a synthesis as opposed to your thesis or antithesis in terms of, you know, working physically versus working from home, which is now repackaged as remote work. But ultimately what will happen is, you know, what I think will happen is a lot of these folks have spent massive amounts of time creating policies around remote work. They've integrated and, you know, purchased subscriptions and, you know, these things aren't going away. What they'll find is, like, you know, more creative ways, different use cases to use them. But yeah, we still haven't solved. The thing is with folks who think like the future is now completely remote, probably aren't stuck at home with a lot of kids and probably, you know, weren't experiencing Zoom fatigue and are probably not putting themselves in the shoes of like many of, you know, middle America that are associating Zoom with like a pandemic and staying with kids all day. And but I do think what will ultimately happen is it's a synthesis of the two. There are perks to it. And I don't think it'll be absolutist one way or the other. We did get an interesting question, if no one else has anything to say, in the chat box. And someone asked, is the adjustment that we are seeing from venture capital in COVID-19 a reversion to the mean or a more serious long-term economic hit? I want to answer this question really quickly because it's along the note of something else I've been seeing where people ask, is VC open for business, or are people not investing and just saying they're open for business and want to look good? And I think the question is so reductionist because it assumes that all VCs raise capital from LPs at the same exact time and deploy on the same exact schedule. And that's not the case. Some folks, Corona hit at different stages for different funds. Some folks had just raised their fund and are sitting on a lot of dry powder and are ready to deploy and mean it when they say that they're open for business. So the types of companies they're investing in and what they're looking for and the types of companies they're investing in may have changed. And, you know, folks that fall in the other camp who were just about to raise and had already fully deployed are, as you can assume, looking inward. They're looking, you know, at updating IRR. They're making sure all their companies have anywhere from 12 to 24 months of runway. They're, figuring out how to put the best foot forward for LPs when markets, rebound. And so I think that it's just really different in terms of the VC you're actually talking to. And that's the reason that people feel confused, is because it really is different based on the VC you're talking to.
I think, Jill, you're on talking, but on mute. It's one of those little tricks about using Zoom. There you go.
Yeah, you would think that after, you know, days and days now of back-to-back Zoom calls, I would have that down, but alas. I agree with everything that Suna just said. And I think that there's an even more macro point outside of venture capital here to make around just reversion to which mean. Because are we going to see a reversion to the mean of the last decade? I don't think anytime soon. That's hard for me to see just from kind of the macroeconomic perspective, even, venture capital aside for a moment. But is this a reversion to a much longer mean? I think perhaps, because it's important to put into context that the last decade has itself been very exceptional in terms of the easy monetary policy, combined with really global tailwinds around growth across verticals, across sectors, across geographies. And that in itself has been a real exception to, again, the much longer sort of centuries long mean that one might point to. If people are interested in this topic or this kind of framework of thinking, again, about the larger economy, I highly recommend Ray Dalio's book, Big Debt Crises. And he talks a lot about these cycles and whether they're sort of the short term or the long term. And I think that we may have reached the local peak of one of the short term cycles. I think that the big question, the many trillion-dollar question that we're facing right now is whether it is also a downturn from one of the longer term cycles that we're seeing in the market. And that I don't have a good answer to yet. But I wonder what you all think about this question in light of the kind of macro economy as well.
Well, sorry, Big Debt Crises is sitting on the floor next to my bed, and I realize it's not the best bedtime reading, but I think it is appropriate. I don't know that I have a real great answer there. I think Suna's point about every fund being different and capital meaning different things to different people at different times is really true. And we've been trying. Part of why we've been investing so heavily in crypto as an asset class is that we feel like it is responsive in a different way to sort of monetary, shocks and all these economic shocks. And Jill, I know this is something you've written about a whole bunch, and I can't claim to be, an expert really there, but it does feel like that's an area where there's a new forces, more new physics being introduced that have the potential to create a bunch of new dynamics in how technologies get built and how things get funded, not even beginning to get all the way down the line towards what does that mean for sort of the macro capital flows in the world. But it does seem like there's a whole lot of uncertainty right now, and we've been looking for, I don't know, hedges against that, where we can find them.
So I'm not gonna really, kind of really speak to the question, but I'll kind of take a slightly different tack, which is that, so in Southeast Asia, we are a smaller market, say compared to the US, which is much more global in nature. A lot of companies that result are, again, way more global and more interest globally as well from investors, supply and demand. From this side of the world, we've seen valuations kind of really explode over the last several years. I know this is part of the global trend as well, but one thing that is important to remember is that this part of the world, we do have less, less of a market, for example. So basically my point is that some companies are raising based on using global valuations when the market that they're playing in doesn't really warrant that kind of valuation. So when you look at this, climate right now, where the ball is more in the investor's court, I think it's a fairly healthy kind of decrease of valuations. Obviously, startups are not going to like hearing that, but I think startups are realizing that, hey, you know what? Actually, this whole push to let's be profitable, let's really conserve cash flow. It's making them think, okay, yes, we need to really make sure to look at our unit economics, make sure that works well, and it's targeting their own market, right? And not just based off like all the tailwinds of the global, let's grow, let's pump in like millions of dollars, and so your valuation can be 20x, of your GMV or something, right? So that's no longer going to hold, and that's not holding anymore. And so I think for this part of the world, I think that's quite important to think about.
One thing to consider, I think you guys covered a lot of ground, is that the mean isn't this, plateau that is sustainable. It's oftentimes more cyclical. So you get out of a bust cycle more risk averse, you're looking at more profitable companies, things that sometimes you're straying towards, unsexier investments. So you're looking at the unsexy investments, or you're looking at more enterprise, based investments. Some folks become allergic to consumer, whatever. But then, over time, you get more confident, markets look better, there's more frothy behavior, cost of capital goes from infinity to zero overnight, and then it's kind of rinse and repeat. And so I do think that a lot of what we think will happen in the next 3 years won't happen in the next decade. There are going to be startups that, like, frankly, don't deserve to be funded or need to be funded, but because capital is so cheap, will be. And then that's usually when you can see the writing on the wall, and you can see, a bubble's about to pop, and whether coronavirus is the pin or not, is no one really can predict, but or something like that. But I do think that this is more cyclical behavior, and the mean is not this perfect middle that we've achieved and always have. And then all of a sudden this is not a black swan, but when there's a black swan that this occurs out of nowhere, I mean, you can see these things coming. It's just a matter of when it happens.
I just want to, this is kind of an aside, so I apologize if this is a rabbit hole no one else wants to go down, but I have not understood this whole notion this is not a black swan event, because okay, sure, you could have seen it coming, but the thing is, you can't predict when it's going to happen. There's effectively no one in the world who made that call with any degree of accuracy about the current situation. And you could have said the same thing about the 2008 financial crisis of, oh, you could have seen it coming. In fact, there were people who saw it coming and who made the right bets. And so that's just been kind of a thing that's been grinding my gears for the last couple of weeks.
A quick answer to the quick aside. I was also, kind of taken aback. So I was, researching further what Talib meant, especially because it's at least a gray swan. No, but it's, I think where the crux of the argument comes is, like, if you look at what Bill Gates had been saying, and what the actual labs that were set up to tackle coronavirus in Wuhan were saying for the longest time, is that in the next few years we can see something like 2003 SARS occur in the next few years. And so I think it was not that it was predictable, but it was regular, and so that's why they thought it was a white swan. But quick clarification.
Interesting.
That feels like semantics to me. I mean, this is one of the biggest shocks that we've ever seen in the last, in maybe even hundreds of years. I mean, it's or at least 100 years. It's on the order of the Depression and world wars. That we've never seen the economy just stop. So whether it's a black swan or a white swan or a gray swan, it's big.
So one of the other questions in here, as many VCs are now going to be a bit more risk averse, focused on their existing portfolios, both things definitely true in my opinion, is this unique opportunity for new models and new micro VCs. And going off of what you were just saying, Nick, we've never seen this environment before. It is very hard to make predictions into it, and it's also very easy, as I frequently have over the last couple of months now, to go down this kind of death spiral of pessimism. But I do think that there is a lot of room for opportunity in here as well, which is kind of what this question speaks to. And so just to speak to that quickly, I think that there's always been opportunity. I think that over the last several years, we've seen many move into these unique opportunities for new models and for smaller micro VCs to come in and disrupt the way that the VC landscape looks. That said, I also think that it is important to acknowledge that venture capital is a frustratingly difficult game to get into. And so not only has the game gotten more difficult for the players already around the table, it's also important to acknowledge that I think that the seats at the table and the ability to get into the game has also gotten much harder, which is something that, frankly, I worry about in terms of the fact that if you look at the players around the table right now, there are not that many women, despite the makeup of this panel and what that may make you think. There are not that many underrepresented minorities. There's not even, in many regards, that much diversity of geography or location or thought or background. And so that's one big worry that I actually have, is that as the barriers to entry have gotten higher, just even over the last couple of months, in terms of fundraising, et cetera, that the players at the table have gotten even more entrenched. So in short, I think that yes, there are unique opportunities right now because the rules of the game have shifted somewhat, and the game has also gotten harder to play, even for existing players. But my hope is that we do see new models and new players get funded and get involved. But I would be curious, Suna or Gwendolyn or Nick, what you all would have to say about this.
I do think that.
Yeah, go ahead.
Oh, well, yeah, I do want to thank you for bringing up the fact that, just women, investors in general, but then also like brown or Black women as well. I mean, I don't see many. But so one, I do hope new players get funded. But then secondly, an advantage that has been created because the internet has touched so many verticals is that being vertical specific can be an advantage that a lot of these incumbents don't have. And so when you're looking at many investments, yes, sure, there will be Amazons of VC and that, they touch everything. They have great brands that they've invested years into creating and, getting their name on your cap tables, like gilding the cap table, right? But then there are more vertical or niche specific funds that can capture those power laws within each vertical. So you have like the Ribbits of the world, like fintech, you have crypto, you have gaming. And so I do think that there's this kind of, I do want to avoid using Cambrian explosion, but I'm not quite sure what other phrase is more fitting, of these funds that are very hyper-focused that will just beat incumbents in every other way because they spend all of their lives on these verticals and know it like the back of their hand. So I do think that there's an opportunity there.
Totally agree. I think we work with a lot of small focused funds, especially in emerging areas like crypto, where having really focused knowledge is like a really big, important factor. And so I like the idea of, managers who are narrowly focused, who are new, who are really deep in an area. And that speaks to an extent to the diversity questions that you brought up, but it's really hard to raise a venture fund right now. Today. And I think there's been a huge growth in new managers over the last, 5 years. And then right at this second, I think it's probably harder than ever to raise a first-time venture fund right now. Man, so many good questions coming to the chat now. Where should we go?
Address a point on diversity. Just a quick one, just on that. So in Singapore, it's quite diverse. I was just like mentally going through and trying to remember like all the VCs and where they're from and stuff like that. We are very international. I would say maybe 50-50 kind of like, or rather a lot, 80% maybe foreign, but kind of mix of skin color. Just putting it out there. So it's quite mixed, but female wise, it's still quite a percentage. They're usually more associate level, so more juniors. So less. So female diversity proportion, still not doing that well, but I think color of skin wise and nationality is quite diverse in this part of the world.
Jill, you want to take us to the Q&A?
Good to hear.
Yeah.
Awesome. Thank you so much for this panel. Yeah, we have questions actually in the Q&A box. One which is really interesting about VC business basing themselves on startup that monopolizes the space and the advent of crypto economic protocols and the whole crypto space that I'm personally really fascinated about. What are your thoughts on crypto in general? I know like Suna and Nick and Jill have a lot of experience in this, so I would love your answers.
All right, I'll take a quick crack at it, and then I'll be real quick. I mean, I think a lot of platform investing over the last 10 years has been about creating sort of a data monopoly where you own a platform and all the transactions go through you, and that can be narrow, intervertical, or it can be broad and horizontal. Obviously, in crypto, on the one hand, things are open and open source, and there's a lot of mixing and remixing and forking. On the other hand, I think the nature of protocols like HTTP and SMTP and the other open protocols have a natural convergence to them where it's likely that universality may occur. And so I think there is a potential for winning protocols to be way bigger than any winning companies were in the internet space. And at the same time, what's so cool about the crypto ecosystem is that on the edges of those protocols, everything is open and hyper competitive. So, whether you believe, Ethereum or some other smart contract platform will be the sort of winning protocol for a certain function, you've got this massive explosion of interfaces and applications on top that generally require very little capital investment to get going because so much cost is outsourced, into the lower level protocol. So it's this kind of weird mix where I think it's hyper competitive and also the potential for kind of winner takes all dynamics on a larger scale than we've ever seen before.
Yeah,
Yes.
I agree with that. So 2 quick notes about crypto. It's really interesting to see how folks respond, when Bitcoin's up versus when we're in a bear market. You're incredibly enthusiastic. You think it's the future. For general folks that don't follow it closely, when the price is up, and then when it's a bearish market, all of a sudden it's a silly toy, or it's not cool, it's not happening. And I do think that even for folks inside the space who say they don't pay attention to price or it's not important, if you look at most paradigm shifts within industry period, but specifically internet-wise, you see these bubbles of speculation before you get to more of this logarithmic growth, right? And so I don't see any other way for people to get into a space or to massively get people's attention, unless there's more the speculative period where people are making money and then they look up, right? Oftentimes people are more concerned with numbers when they're prefixed by dollar signs. And so the speculative behavior is usually needed in order to get people's attention first, and then to start building and bring them in and stay for what's actually changing. And so let's look at what is changing. If you have looked at the brief history of the internet, when Web 1 first came about, the primary monetization model that folks thought was going to, be the de facto type of monetization was subscriptions, because this is what we were used to when we read New York Times, when you were reading Wall Street Journal, and we thought that it was purely just going to come on screen and it would still be subscription model. The fact that we were able to pivot to advertising, and there were jobs and industries formed around digital advertising, which wasn't possible to the extent that it was in the computer in an analog version, unlocked a different type of business model, unlocked completely different companies, right? And so now that model has been exhausted to a degree, folks are buying impressions, folks are buying clicks, you don't know what numbers to trust or not. There's room for a different type of monetization model. And I think that where crypto is heading is this community ownership of a platform. You want to be rewarded for believing in someone early. And I think this actually touches on, what are the new ways of funding that we're going to see. I do think, putting a stake behind a community or a digital corner of the internet that you really believe in, and that just gets valuable over time, it's something you want to reward your early users for. You want them to have ownership in and to follow you ardently. And I know that one common critique that a lot of these community-focused brands like Glossier have had is that over time they lost that initial core community, and they didn't keep them engaged. They didn't reward them early on, or they didn't really have ownership in it, and then they just moved on to the next thing. And then they fall into the same problems that Revlon or Estee Lauder have, right? As opposed to this cool community-focused type of brand. So I do think that crypto will enable folks to be more active participants in the platforms that they follow, instead of just these passive observers that feel like they have no stake in it.
Can I ask all of you, has anyone here tokenized yourselves?
Yes, I did.
Oh, really? Like where? How?
I just raised an ISA. I believe I'm the first ever person to raise an ISA on Ethereum. And I know there's
Wow.
a lot of exceptional people like James Gallagher, who's a really ambitious young person who did publicly trade himself. And I was always talking to him and saying, why do you not use crypto? You know, it's such an easy stack to do. And he had the meaning and the software engineering capacity to do so. And he didn't care about the crypto value prop, which is secondary markets or leveraging decentralized finance. And so, yeah, I just did last week and it went really well. I raised $20,000 as a future founder. And I think, you know, it's a VC panel. I'm not a VC and I am pre-startup, I think. And so before being a founder, giving up income is way easier than giving up equity in my future ventures. So I thought that was the right choice. And
How did you design it, and what did you use to build it, and
so
what were the
on
terms?
Ethereum, so I'm a Ethereum like rationalist, maximalist. I actually think, you know, like breaking news, A16Z just raised $500+ million for their second crypto fund this morning, and I believe this will be exclusively on the application layer, particularly either Ethereum or the platform with the best data and metrics on. But for now, it's Ethereum, I believe. And so yeah, it's a ERC20. It's super simple. It was a Google form. I fixed the price and yeah, I got 30 participants, average of $800, and I am willing to let them vote on my life, but it's non-binding, and just to get great feedback. And now I have 30 people incentivized to help me later in life as a founder. And most of my VC connections actually decided not to invest because the returns are capped at 5x, which is not attractive. But it was a great way to to signal that. Actually,
So Alex, what was your pitch? What was your pre-product market fit pitch?
so I think I just leveraged my following that I made the past year. I've done a few projects in crypto and in the decentralized finance space, and so my pitch was it's I think it's half philanthropy, half support of being early on someone that's kind of young. I think this primitive should really apply to under 23 programs, which is kind of like decentralizing the Till Fellowship to outsiders, like maybe like Pioneer.app, which is like a great always on hackathon. This would be great to I would invest in the top 10 Pioneer winners every month. And so yeah, I don't know, it's like I'm super ambitious, and if you're early on in my life, I will be super grateful. You might get great opportunities, and it's a kind of badge of honor that you supported me. And so I think I'm the first one, but dozens of people are planning to do so in the next few weeks. And so this basically
it's amazing to me that with Ethereum, as an example, any person can just do this on their own, right? So you don't need a website or a platform or a company in order to instantiate a personal ISA. You just need to be able to write a smart contract, which is totally wild.
You might still want a lawyer. You might
probably.
No, like
I was about to say that.
I've had this question hundreds of times. I don't think the SEC cares about me. Like, no, I don't believe, like, it's only $20,000. I had some disclaimer. There's some utility to my token because you can utilize my time. You can spend my tokens in other ways. So I have like at least 10 counter agreements for the fact that it has some elements of security, but pairing a new model forgives me to do any legal contracts. But I'm happy to, retroactively wrap my token in some legal frameworks, but not for now. And I didn't want to burden myself. And I know that Stripe, Airbnb, and all the biggest companies broke a lot of laws in the past decade to rise up. So I'm not really fearful about legal repercussions for now.
This is not legal advice. This is not legal advice. Really, really quickly, I just want to comment one quick thing, and then would be very happy for you to, bring it back full circle. I just wanted to clarify that, for community ownership, it doesn't have to look like, a new protocol. It doesn't have to look like, an alternative type of chain. It could simply be on a front end user facing representative of a share that you have, and then it's just denominated maybe like backed by Bitcoin and able to be sent across countries, and that way you don't have to face the legal overhead that usually comes with having it denominated in people's own currencies, and they can easily convert it. So there's different ways to go about giving people like building in this Robinhood layer or Cash App fractionalized share layer to communities that you believe in. Take it away, Jill.
Yeah, no, I mean, I was just going to say, we kicked off the conversation by talking about, oh, has software eaten every single vertical? And while one might have said that, yes, software has eaten personal finance, I think that what Alex
Not even
and
close.
Suna were just talking about is a great demonstration of like, sure, software ate personal finance with Mint and Robinhood and Wealthfront and all of these things, but it didn't quite eat it in the way that Alex would have you have. And so I think that, there's no end to sort of the human imagination of what we can do with all of this. And I think for that reason, we can't be dismissive of any given vertical. And so that's a big part of what keeps me excited.
Yeah, and I think it's like the thing, a lot of folks on this conference are interested in crypto, and the reason that we're so interested in crypto is because it's possible for a person to go and do that. Like you can just write some code and build a thing that is like live and out there, and that feels amazing. And some of these things are scary and weird, and I think they're going to break in bad ways and have the potential to hurt people, and that's why there's this is finance and money. At the same time, it feels to me like there is a tidal wave of creativity at the individual person level that is happening in the crypto space, particularly around Ethereum, but more broadly, that is just like so encouraging.
Absolutely.
I love hearing all the stories about it.
And there are forces on the periphery that we haven't even accounted for and are going to be combined in ways that we don't even know yet. So even if you take into consideration something like Uber or ride sharing services, that wasn't possible without GPS or, something like Google Maps. But the folks who had done that mobile version weren't thinking, oh, this will be used for a ride sharing app called Uber, and they will use this GPS and the advent of the internet and the advent of smartphone use. But all these pieces put together gave way for ride sharing service to become possible. And so something to consider is, what could, in and of itself, a crypto is valuable to us, but what building block could it be, a piece of, right? What's like the bigger picture? And then there are other trends like AI or AR to be looking to guess where that dart may land.
I want to kind of bring it back, and I realize we only have a few minutes left, and I'll leave Alex to kind of wrap things up. But I think on my point is that bringing it back to the investment side of things, when you look at SARS that hit in 2003, mainly in China, very big companies have resulted out of that. So Youku and Taobao, for example, all started by Alibaba. And so it's really in the midst of crisis where big companies have resulted, right? So again, we briefly mentioned the GFC, and a lot of the big companies like Uber, Airbnb, and whatever has all resulted. So I think, come back to investment point of view, this is really prime time for VCs now and angel investors like myself to kind of look at the market, see where the paradigm shifts are happening, and looking to invest. So this is prime time. Excited.
Awesome. Nice ending, Gwendolyn. So thank you so much, Jean, Suna, Gwendolyn, and Nick for coming. That was really insightful, and that was unexpected ending as well.
Sure it was. Sure it was, Alex. You're still open for business on the ISA, right? Just put
no. I had to refuse money because I wanted to cap myself to get great ROI to my shareholders. So people now just
Alex was oversubscribed, is what he's saying.
Yes. Because I didn't want it to raise too much, actually, especially it was during the bear market. So now I'm already up just by fluctuations. Anyway, cool. So next up.
Your pitch is very good, by the way. Now all of us want to go in because it's oversubscribed.
Thank you. Yeah, well, maybe when I do a company, would love to have any of you on my cap table.